Good morning. It is June the 29th, and it is a Thursday. That's not Gib McCarron. You know that. That's E.J. O'Keefe. You know that, too. He's been with us, and he's my sidekick today and doing a good job in what he's doing. Gib is on a business involvement this week, and next week, as he pointed out, we'll see either me and EJ or me and Liz. Next week also, he is in his vacation home. They're moving things into it next week, and that's next week is move week, and he needs to pay attention to that. So he is, like we always do when we travel, he's in touch with us daily. He's in touch with your accounts daily. We have technology that allows us to do that. So even though we're out, we're still have full capability and aware of what's going on. Well, okay. This has been another week. I was taken back this morning by a headline that I saw. We talked about it on the radio. The headline was an article written by a New York financial journalist yesterday. And in effect, he said in the headline, that the Federal Reserve says that there is a catastrophe coming for businesses.
Which is funny because I don't think the Federal Reserve has come out and said that at any point in time. And I know we discussed that on the radio show.
I have heard them say a lot of things. I hear Jerome Powell's remarks picked apart, individual words analyzed, but I don't believe that is something I've ever heard them say. Now, the intent of his article was to say that because the Federal Reserve has increased interest rates so high, so fast, that it is putting strain on companies. He says the Federal Reserve in this says 37% of companies don't have the financial wherewithal to support their debt and pay for their debt as interest rates continue, and that's going to create the catastrophe. And that is a true statement in that the rising of interest rates and the increased interest rates by the Federal Reserve is putting pressure on companies and debt.
Which is true.
But
they have to in order to slow inflation.
Right. And it's not in the opinion of us or others that we read that a catastrophe is out there. But that's not unusual that I saw it, because what we're beginning to see now is we're beginning to see more extremes. We're beginning to see extremes on the side of a catastrophe, and things are going to turn really bad and really south, and you need to get out of the market. And then we got the other extremes of conversations with folks and seeing and hearing people say, why don't I have more money in the stock market? Now is the time to go. Have you seen what NASDAQ has done? And we need to get in and take these treasury bills and get me into the stock market because I want to be part of the game. Now, you said an interesting thing to me. When you see those two extremes occurring and hear them, what does that say to you?
That perks me up just a bit of there may be a topping formation. We may be hitting a ceiling, so to speak, in the near term in the overall market, because we had the same euphoria back in 2021 and rates were at 0%. Now rates are at over 5.5%. And the Federal Reserve yesterday, Jerome Powell came out and said, we're going to increase rates not only once, but at least 2 more times this year. So that for me is just a sign to press pause and really dig in and evaluate where you're allocating money if you want to.
All right. So let's say a couple of quick things that we want you to pay attention to. Right now, at a 6-month rate, a treasury as of this morning, we can get better than a 5+% rate of return.
Over 5.5% as of this morning.
As of this morning. It varies. There's no guarantee to it until you buy it, and then you know what you have. It varies. But that's where the range is. We know that. The Federal Reserve has said it's going to increase rates. We no at least 2 more times. But they also said, how long will it take them to, in their belief, to get from 5% where they are right now to the 2% inflation?
Yesterday, Jerome Powell said it wouldn't be until 2025. So not 2023, not full year 24, 2025. For
All right.
core inflation to get back to their target goal of 2%.
So this is not a party that is getting underway and it's going to be over tomorrow or by the end of the year. It is something that is in the early stage of developing, and opportunity is going to present itself. Also, from the standpoint that you have something called the M2. The M2 is the money supply, how much money's in the system that people have to do things. That number is declining. All right. So the whole point of what we're trying to say to you is we think there is still coming a slowdown. Gibb would tell you that he is adamant to believe that the market is overpriced and it's going to reset, and that the reset is a buying opportunity. However, we are thinking too that possibly recession could be regional or sector oriented, which could mean there could be some opportunities, which means if you want us to take you back into the marketplace right now and not just see what happens in July with another rate increase and get a 5.5% rate as of now and take some chance with it, we can, but you need to understand where we are in the marketplace in order to know the risks you're taking. Mm-hmm. You're taking advantage of what we think's coming. It's going to take a longer time to develop, so there could be some upside above what a treasury does, but you got to be willing to accept the risk because it could go the other way and it could be premature to buy. Now, it would cycle through.
As it always does.
And a year and a half from now or a year from now, if it went down because we bought it in July, it in all likelihood could be up. You'll just have to wait it out. But we're in that position of in the middle. We don't agree with what the author of the article said, there's a catastrophe coming. We do agree, and we aren't going to fight the Fed, but we do hear that folks want to get back in the marketplace. So selectively doing it sometime soon or seeing where rates go, but now you can get in the 5+ range seems to be a good holding place for us at this point in time. We are going to move. We're going to get there. We hear everybody is saying, but you ask us to be prudent about what we're doing and to help you. If you have questions about that, call us. If you want us to talk to you about opportunities in market, call us. If you are concerned about it and we just need to stay safe, call us. We're here to talk. We're looking at accounts on a weekly basis. We know where money is. We do this because we know it is your money.
And your money matters.
See you next week.
Have a great 4th of July.
Happy 4th.